Hello, bonjour, everyone. My name is Eric Chapuis, Business Advisor here at the World Trade Center in Winnipeg. Thank you for joining today's webinar, SR&ED, which will be presented by Andrea Legary in partnership with MEIA, Manitoba Environmental Industry Association. I would like to introduce Jack Winram, President and CEO of MEIA, to provide a few words and offer our land acknowledgement.
Thanks, Eric, and hello, everyone, and thank you to World Trade Center and Recoup Group for partnering with us on this. First, I'd just like to acknowledge we are gathered on Treaty 1 territory and that Manitoba is located on the treaty territories and ancestral lands of the Anishinaabe, Anintinsiwak, Dakota Owate, Dene Solene, and the Nihiluk nations. Manitoba is the traditional homeland of the Red River Métis, and northern Manitoba includes lands that were and are the ancestral lands of the Inuit. For those of you who don't know who I am, my name is Jack Winram. I'm the President and CEO of the Manitoba Environmental Industries Association. Our association represents all the engineers and scientists and environmental practitioners that are involved in clean tech, involved in some of our projects and infrastructure build-outs and natural resources. And in fact, lately I like to tell everyone that we're a key component of the economy. Without our MEIA members in the economy, there's no roads, no bridges, no buildings, no mines, no ports, no natural resource projects like critical mineral mining. So our members are a key component of our economy, and as such, a lot of our members are involved in innovation, and that's why we've partnered with Recoup Group here today. I've actually known Andrea for a while. When I was with industry, she was our SR&ED agent that we work with, and every year we filed. And this is an interesting partnership with World Trade Center. You know, some of our members, especially clean tech members, are starting to look more internationally. And as such, we've started this partnership more fulsome way this year, and are going to be doing more events with WTC, and Eric will be talking about that shortly. But you know, I think as industry and members and organizations start to look and diversify away from our neighbor to the south in this little bit of disruptive economy, it's important that we have some deliverables to our members and the ecosystem that is both representing research and innovation, but also looking to access the fantastic network that the World Trade Center brings to the table as well. So with that, I'll pass it back on to Eric.
Thank you, Jack. All right, so before we begin, I want to share a few housekeeping items. Please send all your webinar questions directly to the chat box at the top of your screen, and they will try to answer as many questions as they can during the Q&A session. For all logistical questions, please send them directly to the chat box, and I will answer your question as soon as possible. You will also receive a copy of the recording of this presentation within the next week. Okay, let's start this webinar. I'd like to introduce you to Andrea Legary. Andrea is the CEO of the Recoup Group, where she provides assistance to companies in a wide range of industries to access the scientific research and experimental development. SR&ED tax credit to fund the advancement of their technology. Prior to working at SR&ED, Andrea worked as an engineer, participating in several of Canada's leading space and defense projects. Welcome, Andrea. The floor is all yours.
Thank you very much. And thank you to each of you for making some time today to learn about SR&ED. I will say when we had scheduled this presentation, we hoped to have details on the changes to the SR&ED program as announced as part of Budget 2025. We will address those today, but unfortunately the legislation is still at that proposed stage. We'll provide a bit of a status update where you can watch for those status updates, but we unfortunately don't have the policy around the proposed legislation yet. We'll still talk to those points because I know some of that, for some of you, that's probably what interested you in today's session. So we'll speak to those changes and where to find updates, and of course, happy to schedule another session once those policies do roll out. We definitely thought there would be more insight into those changes when we originally were talking in the fall about scheduling this for late January. So last year we did 2 sessions with World Trade Center and MEIA, and so those recordings I believe are still available. And so last year we separated into like a SR&ED 101, and then we had a broader deep dive in how to prepare your claim, which spoke in more detail about each of the areas of eligible expenditure types and how to complete the forms. So those are still resources that I think you can refer back to. If not, the intent of sharing that is just that for today's session, which is only an hour long, and where we do want to talk about changes upcoming to the legislation, and then also allow time for questions. Some of these topics are being covered, at a higher level, and so if you do need to deep dive or have specific questions, I can point to some other resources. The other thing that I'll just mention today is I do have my colleague on the line, Ms. Ren Gargan. I am, as Edx said, a professional engineer. I did mechanical aerospace engineering. I've done my MBA, but my background and focus, I've been doing SR&ED for the last 12 years, so I've picked up on the financial policies, but it is very important on our team. We have Ren has a CPA with a task designation, and that tax background does come into play, and the accounting background into interpreting the CRA's policies and ensuring that everything stays on side. So Ren will be watching the chat for questions, and we'll be able to answer some of those as best as she can. So if we do see responses from her, she's part of the Recoup team. So what I'm looking to achieve today is give you some high-level information about the SR&ED program and eligibility, how to identify if you have eligible work, and a very simple, basic introduction to that. We'll briefly cover what the eligible expenditure types are, and then provide a bit of an update around program changes and updates that will be coming in once Budget 2025 is fully enacted. So we say SR&ED, and it's the Scientific Research and Experimental Development Program. And the purpose is to encourage and support Canadian private sector innovation. And, in times such as these, it's more important than ever that we are investing in the development of scientific and technological knowledge here at home, and having that competitive advantage by having those scientific discoveries within our companies. The purpose of the program is to allow for that risk. The government understands that when you're facing a scientific or technological roadblock, there is a level of risk required in deciding to invest in trying to solve and advance science and technology. And so the program seeks to provide some funding support to alleviate some of that risk and encourage that investment. The program is administered by the Canada Revenue Agency, and most provinces offer a provincial R&D tax credit that tags along. In Manitoba, we're a compliant province, and so if you are applying for the federal SR&ED credit, you can fill out the Manitoba R&D tax credit form and submit that along with your tax return, and you'll receive both of the credits, and I'll speak a little bit about that. Alberta and Quebec, you apply separately to their tax agencies for their R&D credits, and each province that you're doing work in may have a separate policy and provincial program that stacks along SR&ED. It's a bit unique as far as government incentives around innovation go. Most of us may be familiar with the NRC's IRAP program, the Industrial Regional Assistance Program that we refer to as IRAP. There's MyTax, which encourages you to work with companies to work with academia to advance scientific issues, to advance science and solve scientific issues. What's a bit unique about SR&ED is it's an entitlement program. So using the policies and the legislation and then the CRA's policies as the framework for that to assess your eligibility. If you've done work that is eligible, it's your entitlement to claim that on your tax return. So versus IRAP, we apply there has to be the budget. It might have to be the right time of year. You might have to be in the right industry and area of focus. You have to get approved ahead of time, and then you do your reporting. With SR&ED, if you have done work in 2025, let's say, if that's your taxation year that was eligible, it is your entitlement to claim that on your tax return. And there is no pre-approval required. We'll talk a little bit later with Budget 2025. There has been a pre-claim consultation process with the CRA in the past, where you optionally could get a pre-claim opinion of around eligibility before you complete the work. And there's some proposed changes to that program, reintroducing it as a way to get some confidence of the eligibility of a work before you start. So each year, I say approximate, but this is the exact number for the year period ending March 31st. So for the 12 months ending March 31st, 2025, the government's 2025 taxation year or period, there was 22,758 SR&ED claims filed. Generally, from the program statistics, there's about 60,000 projects claimed. And so really within a company's claim, you may have more than one project or area of initiative, but about almost 23,000 claims. 96% of those were accepted as filed in 2025. And so I'm just opening my notes on the side. And 4.5 billion in ITCs were paid out. So the statistics, the breakdown of this 96 is 90% of them were approved or accepted as filed. So they received the credits exactly as applied for. 6% were accepted after modifications. So that's how we get to the 96. 4% of the claims were denied. A total of 4.5 billion in credits was paid out. And that was up from about 4.2 billion in 2024 and 3.6 in 2023. And what's interesting and important to note about the program is this number, the 4.5 billion. The only method to control the dollars that go out in the budget is to audit and check compliance of those claims and deny a portion of the claims to reduce the amounts claimed because they aren't pre-approving people. And so sometimes as we go through the policies and the procedures, there is some gray area in SR&ED, and sometimes as we say, the pendulum swings, and we will see a tighter interpretation of the rules when they would like to deny more claims and reduce that amount, or we sometimes see a more liberal interpretation of the rules during audits. And so that's where sometimes having a SR&ED advisor, or at least speaking with those in the SR&ED claim industry, is sometimes important to get a little bit of pulse on where the government is at the moment. So Budget 2025 did confirm some implementation of previously announced SR&ED enhancements. And so in the budget documents, it's proposing that will be an additional government investment of an additional 440 million to increase this SR&ED. So we will expect this number to start to climb closer to almost 5 billion in total benefits. The CRA, through their annual statistics, so this is available on the web, does provide a bit of a breakdown and disclosure of the percentage of investment tax credits, ITCs, allowed by field of science, and then the percentage of the claims based on the income of the business. So the majority of the claims are being made by small to medium enterprises, and a lot of the claims right now are software development. And I think what's driving this is a lot of companies will select software development if they're doing an AI or machine learning project. However, the actual scientific advancements may actually be in something as agricultural, material sciences, even the medical sciences, depending on what that AI project is analyzing. So we are seeing, though, the majority of the projects by a pretty much substantial amount falling into that software development industry. Claiming SR&ED is important. So obviously there's a financial impact. The SR&ED credits reduce your tax liability and provide some cash refunds if you are a Canadian controlled private corporation with certain characteristics, which we'll mention in a minute. But there is a portion that is a cash refund, and this provides funds for future R&D growth and investment in your new technologies. Many of your competitors, if you're in an industry that is heavy on research and scientific development, your competitors are likely claiming SR&ED. And so you, by not claiming, could potentially have a competitive disadvantage of where they're receiving dollars back to strengthen next year's investments, and you don't want to be falling behind. So the financial benefits of claiming SR&ED, we will talk specifically, the biggest one being the refundable investment tax credit that's available to Canadian-controlled private corporations, which federally is 35%. As per the current policy, like pre-budget 2025, other corporations, individuals, partnerships, and trusts are only eligible for a non-refundable, so reduces their taxes owing, investment tax credit at 15%. The differentiator being here, when it's refundable, even if you do not owe taxes owing, you will receive the credit back, whereas the non-refundable only reduces your taxes owing. One of the proposed changes we'll discuss is that public corporations that meet eligibility criteria will now be eligible for this refundable credit, which is a fairly significant change to the program. So SR&ED provides flexible deductions on the current expenditures for SR&ED. So it's a little bit of a niche accounting thing, but normally you would deduct your expenditures in the year they're incurred. If we put those expenditures and claim them for SR&ED, we can actually carry them forward if you don't want to deduct them in the tax year and deduct them at a later date. So if you're already at a loss, you may want to reduce that loss and not deduct those expenditures, and you can carry forward that expenditure pool indefinitely. So that first year you make a profit, or your profits exceed a taxable threshold, you can use that SR&ED expenditure pool to reduce your taxation. So it's one of the benefits that people often don't talk about and may not even be aware of. The most popular is the earning of the investment tax credits that reduce federal and provincial taxes and may be eligible as cash refunds, sort of that cash back. And if you do have non-refundable credits, these excess and in excess of your taxation for the year, you can apply it back 3 years or carry it forward 20 years. So the definition of SR&ED is governed by the Income Tax Act, and it is defined as the systematic investigation or search carried out in a field of science or technology by means of experimentation or analysis to advance the scientific knowledge or to achieve a technological advancement. It encompasses a wide variety of scientific investigation and technical work, and technology, as defined in the program, is the practical application of scientific knowledge and principles. So while technology can be represented in its physical form, the patents is the actual physical product. When the CRA is referring to technology, they don't think of it as a physical entity. They're actually referring to the knowledge of how scientifically determined facts and principles are then embodied into that material, device, product, or process. So once we have SR&ED, there's the SR&ED project. And so that's what we usually are speaking of, is how the expenditures get claimed, but it's the interrelated set of activities that are collectively necessary to resolve the uncertainties that are identified in an attempt to achieve an advancement. And there's a requirement, as we'll discuss, that the attempt is pursued through systematic and scientific methodology with appropriate scientific protocol and performed by qualified individuals. And all of these points become very important through the interpretation of the CRA's policies. So there's the law, which is the legislation, and that is actually what we've seen proposed for the changes from budget 2025. And then there's the CRA's policies and guidelines. So currently there's 21 policies, 5 guidelines, and 3 procedures. In each area that we'll discuss today, and that's why I'm saying this is a high level, the CRA, on materials, on labor, there is a fairly lengthy policy that then defines all the ins and outs of what exactly is eligible, what can be claimed, and how to go about doing that. And so, bedtime reading if anyone's interested, but do know that when you do have questions, there often is a document somewhere that will answer that question. And now that you will have my contact information, never hesitate to reach out to ask those questions. So the basic requirements to claim SR&ED is that you carry on business in Canada, that you're a company or a business that carries on business in Canada, that the SR&ED, the scientific research and development that you're undertaking, is related to the business. So for something like the Recoup Group, if I started today to research some form of medical research, that would not be claimable as SR&ED because it's not related to our business as a SR&ED provider. You have to incur expenditures. I know that one seems obvious, but there are sometimes in education, especially in startups, where they're doing very eligible work, but no one's been paid a salary, no one has taken money out to pay for or the company has not incurred the expenditures, in which case there's nothing to then claim a tax credit on. The SR&ED activities have to be conducted in Canada by or for you, so either by yourself in Canada or by a contractor located in Canada. And you must file a completed claim by the CRA's reporting deadline. And so for SR&ED, that's 18 months past the end of your taxation year for corporations, and 17 and a half months if you were to claim that as an individual through a sole proprietorship. Most companies file their tax returns within 6 months of their taxation year ends. And so those expenditures can go in currently with your tax return, but you do have a full additional year of which you can amend your tax return to claim for SR&ED. So if you are here today and you have a December corporate taxation year and you're just learning about SR&ED for the first time, you do have until June 30th to claim for both your 2025 and your 2024 taxation year. So you could still go back to January 1st, 2024 to claim your SR&ED expenditures, as long as that's filed for your December 31st, 2024. It must be filed by June 30th, 2026 here. There are no exceptions to that 18-month deadline, so it is very important that you keep track. So we'll dig in a little bit here about what is eligible. So there's 3 eligible streams of work: basic research, applied research, so where we're actually advancing scientific knowledge with a specific application, and then experimental development. About 95% of SR&ED claims fall under experimental development, so this is likely where you would also have claims where you're creating new, improving existing materials, devices, products, or processes, including incremental improvements. And this is where the nuance really comes in. For those companies that are performing basic or applied research, their eligibility is a little bit more apparent, and it's easier for them to align their project to the policies. For those with experimental development, it is important that in the planning and the experimental phases that you're keeping science and the systematic process in mind to ensure eligibility of work. So we have the core SR&ED work, which is this basic, applied, or experimental development. And then you can have support work. So support work is work that directly supports and is commensurate with the needs of the basic research, applied research, or experimental development. And this can include engineering, design, operations research, mathematical analysis, computer programming, data collection, testing, and psychological research. So these things themselves are on their own are not SR&ED. However, if you are required to do these tasks in support of to resolve your uncertainty and as part of your experimental process, these are the types of work that can be claimed. So every new product requires engineering, design, and testing. However, this work will only qualify if you have first identified your uncertainty, and this work is in support of that experimental development work. There are other support activities that are not specifically included here in paragraph. This is called the paragraph D definition of support work. But other support activities that aren't included in this definition may actually be included, but they're usually considered overhead. And so there's some implications of that as to whether or not you actually can claim those overhead expenditures in the methodology you use for your SR&ED claim. What's not eligible, so we cannot claim, is market research, sales promotion, quality control or routine testing, social sciences or humanities research, prospecting, exploring, or drilling for minerals, petroleum, or natural gas, the commercial production of those new materials or devices or products. So once the SR&ED is complete, the first commercial production run, the SR&ED stops. If we're just making routine style changes or just collecting data as part of our normal standard processes, those activities would also not be included. The key distinguishing feature in determining if it is eligible work or ineligible or eligible support work or excluded work is looking at the intent. So why is the work being done? So around the data collection, if it's routine and just part of your standard processes versus are we collecting the data for the specific support of the trial? So going even a bit further into how to define eligible work, this is specifically from the CRA's current guidelines on the eligibility of work for SR&ED tax incentives. This guideline policy or guidelines replaced the previous eligibility of work policy. The CRA has recently added that archived policy back onto their website for the purpose of the law actually never changed. They just improved is their interpretation. They changed their guidelines to try and be a bit more simpler for people to understand. However, the old eligibility policy had several examples that were helpful to users. So rather than introduce those examples back into their simplified guidelines, they have put that link back to the archive policy on their page. And so that does then allow, I'll just, someone else can taking care of the lobby there. So that does allow you to refer back to those archived policies if you want some examples, etc. of some of this. So the way they're currently articulating the how to identify your work is we look at why the work is being done, so what the purpose of the work is, and it must be to advance scientific knowledge or achieve a technological advancement, and then how you do the work. So there are some companies where the purpose and the intent was to achieve a scientific advancement, but you must also then accomplish the work in a systematic way, so consistent with the scientific methodology or process. So think grade 6 science, where we learned how to conduct an experiment, how to define your hypothesis, how to test your hypothesis. They do expect that your investigation is carried out in a formal, documented manner. So the why requirement is that you must conduct the work for the purpose of advancing scientific knowledge or achieving that technological advancement. It requires the generation or discovery of knowledge that advances your understanding of science and technology. Now, this starts to sound like you have to receive your PhD in an area of science and technology, and that's not necessarily the case. But often when companies are speaking about their projects and preparing them for SR&ED application, they talk about the thing, the product that they are trying to achieve, and what the CRA wants to hear about, and what the crux is for determining the eligibility is what knowledge is required to achieve the thing. And so if they want to understand what are the relationships or parameters and the interactions between those that you do not know, and that knowledge is not available in the public domain, and then how that knowledge will then be embodied in the solution. So this is a little bit nuanced in defining, and that is really where like a SR&ED advisor or consultant can help you frame your project in alignment with eligibility versus your business project of developing a new product. So when we're looking at some characteristics of your problem within the company that might suggest that there is insufficient knowledge and that you might then have a valid uncertainty that requires that you must develop new knowledge, is that the existing design methods are not applicable, the requirements or specifications for your new product do not conform to existing standards. There's too many variables or unknowns. So often there's limitations in engineering analysis of where we can maybe solve for one variable or the other, but once we have to look at how they behave as a system or how they interact with one another, there aren't standard engineering procedures, or there are limitations in establishing those relationships. Parameters or conditions are outside of normal operating range. The nature of the problem is evolving. Data is not readily available, and they're interlocking constraints. And so these bottom three are often some of the most common we see right now, especially in artificial intelligence. Like the nature of the problem is evolving. So you may be using certain AI or models or machine learning techniques, and as fast as you're integrating them into your solution, the scientific knowledge base and those products themselves are evolving, and the developers of those tools are not necessarily considering your use or application as they're evolving those. And so if you especially are linking your solution to one of those products or tools, they may break your solution and you will not have the data readily available as to what, OpenAI has changed that has then caused your system to break. And you basically have to develop the knowledge yourself of how your system is interacting with theirs, and what are those, how to resolve any undesirable behaviors. The how requirement is, again, how you perform the work. And so they do require that you are generating an idea consistent with a known fact, that hypothesis, that you are then testing that idea or hypothesis by means of experiment, that you're developing logical conclusions on the results of your findings, and that you're keeping evidence of this work as it is generated. And that really is key. They want to promote the development of scientific knowledge. And so if you are not keeping documentation, if you don't have that evidence on hand, then it is hard to say that you advanced knowledge or achieved a proprietary advancement. Let me give a little bit of example. This is actually one out of one of the expired policies, just to differentiate eligible work from ineligible work. So in this example, you're a chemical company, you're developing a new process for a chemical product, and part of the process involves a series of pumps. Those pumps are starting to corrode after 6 months, even though they had an expected lifespan of 10 years. And the pump supplier has found that there was a corrosive liquid, and they weren't designed to come in contact with a corrosive liquid. So after a few weeks, you're able to trace the source of that corrosive liquid to a sporadic leak in your filter system. You found that the leak was likely caused by the filter system operating at a higher temperature than it was designed for. You go ahead and replace your filter system, and it appears to resolve the problem. This would be an example of a project that's not SR&ED. So even though you at the beginning might feel, hey, I have an uncertainty as to why these pumps are corroding earlier than they should. Once you do that investigation, it appears to just be technology that was not suitable for the application, and that there is a solution that you can then go put in place. So this would be what the CRA would call a technological challenge or a technological problem. It would not meet the criteria of an uncertainty. In the second example, your pumps are corroding after 6 months. You start to investigate the program. You find that the leak in the seal was allowing corrosive liquid into the units. And these pumps, in this case, were designed to operate in a corrosive environment. You replace the seals, but the pumps again show signs of corrosion after 6 months. And again, there was a leak in the seal on the shaft. You find that the temperature of the shafts of the pump after they work on it for a long time was above the maximum recommended operating temperature. So you're operating outside of your normal established process, and that after prolonged operation, these seals are failing. So in this case, once you discover the cause of the problem, you start to work on understanding the relationship between the sealing material and how the profile of the seal changes in a high temperature corrosive environment. So you actually, while the manufacturers have data on the behavior and the physical properties of the seals at low temperature ranges, there's no information or data on their resistance or physical properties at high temperatures. And there was no information on the profile, what seal profile would be suitable for high temperature corrosive environments. So in this case, we've established there's a gap in the available technological knowledge. We cannot get that from the manufacturer of the data that exists. And so now we will design an experimental program to test a bunch of different seals, their material properties at high temperatures, and how those seals behave in this environment. So you likely will have a side-by-side experiment of 3 to 5 samples, and you're actually charting how does the behavior of the seal change as a function of temperature. And so that's that new knowledge that you're actually gaining that was not available to you. And that's really how you show that the purpose was to resolve that knowledge didn't exist. And then your advancement is understanding how that worked. And you go about it in a systematic way, testing different materials side by side, incrementally changing the temperatures, recording those results, and analyzing them for outcomes. That would be an example of what would be considered an eligible SR&ED project. Before we jump into the expenditure eligibility, does anyone have any questions around technical eligibility? I know it's a really deep subject, and as always, don't hesitate to reach out if you do have specific questions to your own application. Okay, not seeing anything. So the next, the probably more exciting portion is what is it worth? So what expenditures qualify? So once we define that we have an eligible SR&ED project, we can look at the expenditures related to the work. We're allowed to claim expenditures related to the wages, the salary costs for specified and non-specified employees working for their hours and their time on the project. We're allowed to claim the overhead costs associated with the project, and there's two methodologies to do that. Either through proxy, which allows, if you select proxy, the CRA allows you to add 55% of the salary expenditures to cover your overheads, or you can actually then go use the direct labor traditional method and actually claim the overhead costs individually themselves. So again, each of these has their own policy that governs it, and it gets quite detailed. So we won't dive into that today, but if you do want to learn more about how that works, we did go into a bit more depth in our longer presentation last year, but also happy to have a call and address. You're allowed to claim materials that are either consumed in your project. So in the example that was provided, the actual seals, if you're destroying those pump seals as part of your experiments, those are being consumed in your trial, or transformed. So if you're building a prototype and it still exists after you test it, but you have used the materials to transform them into your prototype that is being used for SR&ED, we can claim those materials as well. We can claim Canadian arm's length contractors that are doing that type D support activity, so engineering, mathematical analysis, etc. Those are eligible at 80%. And the reason for that is that the CRA views that those contractors are likely charging you profit, and so that you can claim those expenditures at 80%. You put in the full value, the forms take care of that 20% reduction for you. We can claim third-party payments to research institutions. So if you are paying MyTax, MyTax is a bit unique in that you pay MyTax to participate in a research partnership. So those payments to MyTax, payments to the University of Manitoba or Red River College for research may be eligible as both contractor and or third-party payments. There's very specific rules around differentiating between those. And then capital expenditures. So as I mentioned, in Manitoba, actually, we've continued to allow capital expenditures for SR&ED since they were removed from the federal program in 2014. But in the federal program, they are currently set to resume for taxations post December 16th, 2024. So just briefly, a little look at what an example of what SR&ED might be worth. So in Manitoba, for a Canadian-controlled private corporation who does not owe any taxes, so is not taking the non-refundable tax credits, so all of this is a cash refund. On $100,000 of labor, we can mark that up by 55%, presuming there are overheads in the company that exceed the 55%. We would get $155,000 cost for SR&ED. We would get 7.5% of that as a refund provincially. On the balance, so they do remove what you get provincially for the amounts that you can claim federally. We would then get an additional 50, and you're actually achieving 61,000 or 61, almost 62% of that original base salary back as a refundable SR&ED credit. On materials, it's almost 40% here in Manitoba. Contractors, it's about 32% of the original costs. And currently in Manitoba on the capital expenditure, it's only eligible for that 7.5% cash. I'm just going to skip to this, or actually we have time. So so that's sort of the what is it worth. And so just as a quick overview of what the SR&ED claim process looks like, as you would determine your eligibility, identify those eligible projects, determine your start end dates and the scope of the work, identify the costs, assess any other factors, prepare your SR&ED claim forms, integrate those into your tax return, and then file your return and wait to hear back from the CRA. After that, you file, you may or may not hear back from them for an audit. And that is a whole separate presentation in itself, is how to deal with SR&ED claim controversy. So one of the changes in 2025 was last January, almost exactly a year ago today, the CRA released a new policy around gross negligence and SR&ED. And so I do like to bring this up as the CRA has outlined some common mistakes they were seeing being made in SR&ED claims, and they have, introduced an actual application policy around when they would consider charging gross negligence penalty for SR&ED claims. So they could consider charging gross negligence if you are overstating the amounts on which the SR&ED tax incentives are claimed, you're including amounts in respect of a project, and there's clear evidence that you knew the project did not involve SR&ED, so that you knew that there was not eligible work and you claimed anyways, that you describe activities that did not take place. Now that is just fraud, but so I think that one most people would be comfortable with. But there's also or they did not take place in the year, and that's why it's very important to have records, because what might have been December of the prior year, it sometimes is very hard when you're looking back a year or a year and a half, or sometimes even up to 2 years, depending on where your taxation year is. That you're looking back 2 years and you may not remember the difference between December 2023 and January 2024, but misrepresenting the activities into the year can be considered gross negligence. If you have a review and the CRA tells you that your activities are ineligible and you continue to claim those amounts, that could be considered gross negligence. Similarly, if they tell you that you have calculated something wrong and you continue to use that calculation methodology, that can be considered gross negligence, and continuing to claim unsubstantiated amounts. So if you're told you must keep timesheets or keep other documentation after an audit, and they return the next year and you are not doing so, that can be considered gross negligence. One of the importance of this is there have been situations where companies are denied their SR&ED, but they feel strongly that it did fit within policy, and then they will not object to those because they don't want to go through the notice of objection or tax court process. And if you do not object, and you have been told that these things are not eligible, you could be at risk of being charged with gross negligence by the CRA. So if you do not agree with the CRA post-audit, it is important that you file an objection and do register that disagreement, so that you protect your ability to continue claiming in that manner if you feel that they are wrong in their interpretation. Kathy, I see your question there. It is related to your taxation year. So yeah, I keep saying January, December as like an easy example, but it is your business taxation year. So as a March year end, if you're April to March, it would follow that taxation year and the taxation filing. So in about 8 minutes here, because I'll try and leave a little bit of time for additional questions, what have they proposed to change? So in budget 2025, they have proposed some process improvements. So they are implementing an elective pre-claim consultation. So you could phone before you start the work and ask the CRA for an opinion on the eligibility of that work. If you receive, they will come out and review that. They will give you a finding, and then if you perform the work and file, then your claim will be assessed using a new enhanced AI tool. If it's it might be accepted within 60 days, or if it's selected for a review, then it would receive a streamlined review where the review is restricted only to the expenditures and not debating the eligibility of the work, because you received that pre-claim consultation. So that will receive you a determination in the event of an audit much faster, guarantee they're proposing that it would be guaranteed within the 90 days. In the current process, you submit your claim, they do a risk assessment, they assign it for review, and that review process can take up to 180 days is the service standard, and we do see some take longer than that. So the proposal is that this pre-claim consultation would allow you to have some certainty and shorten that process time. Now, in the past, those pre-claim consultation reviews were taking place with the same reviewers who were trained to come out and audit and have, in some cases, some very narrow interpretations of SR&ED eligibility. And so my personal experience in the past pre-claim consultation was that you would ask, and then you might get a very limited view of eligibility that you might not agree with, and now you're basically guaranteed an audit. So it will be very interesting as they reintroduce this pre-claim consultation, if they are taking a more open approach to working with companies, that if they feel that you're not eligible, if they are maybe helping you frame out how to address those concerns. But yes, the past pre-claim consultations, I did have several companies that had very negative experiences. They're going to propose to increase the use of AI in the program's administration, so that will be interesting, and try to risk assess those and avoid having low risk claims have unnecessary audit interventions. They're looking to streamline the review process by eliminating unnecessary steps and reducing some burdensome information requirements. And those implementations should happen as of April 1st, 2026. So these are not related to the legislation and the law changes that are required for budget 2025. These things we would expect to see in place as of April 1st. The financial changes, which do require the legislation to be changed, there's a few. So currently, the annual limit of expenditures for a CCPC to earn the enhanced 35% credit, you can claim that 35% on your first $3 million of SR&ED expenditures. That is doubling now to $6 million. So that will be a very significant increase in the potential refundable credit for companies making large investments in SR&ED. It's currently, to get that $3 million, they look at the companies to be eligible for that. They look at your prior year taxable capital. So if you are a large corporation, or if you're a CCPC, but you happen to own buildings and assets and taxable capital over 50 million, at this current time, you would no longer get any access to the 35% credit. It currently phases out between 10 million and 50 million. So in between, you would get 1.5 million of expenditures at the enhanced rate. Those thresholds are moving to 15 to 75. So anyone below 75 will get some, as a CCPC, would still get some portion of it. And then it's being calculated off the 6 million. So even with, 15 million if you have 50 million of prior year taxable capital, you will now be eligible for 6 million of expenditures at the enhanced rate. And even in the middle of there where you'd be well into being phased out in the prior policies, you will still have access to potentially the 3 million that you already had in the past. So those are fairly significant changes, but affecting mostly larger companies or companies with a large taxable capital base. One of the big ones I mentioned, they're extending the enhanced refundable SR&ED credit, so that 35% cash, to eligible Canadian public corporations. So there will be rules around who's an eligible public corporation related to the revenue that they are generating, as well as potentially their taxable capital. And so there will be rules around who is eligible Canadian public corporation, but this will have a big impact to those clinical trial companies like in the medical sciences where they go public and yet they are still in deep R&D phases and are not yet maybe earning revenue. And then the biggest one that sort of impacts almost most claimants will be the restoration of the eligibility of capital expenditures for both deducting against your income and the investment tax credit components of the SR&ED program. And the way it's written is it's effective for property acquired in taxation periods beginning or after December 16th. And so we have actually seen this phrased. Most of these things relate to taxation periods beginning on or after December 16th. We've also seen in the proposed legislation, it actually says for capital property purchased, or on the next slide I have it, but more that it was bought after December 16th, 2024. So capital expenditures, or the return of capital is sort of the big one, is an expenditure of a capital nature that at the time that you incur that expenditure was for the provision of premises, facilities, or equipment that are intended to be used, all or substantially all of its operating life or expected useful life for the prosecution of SR&ED in Canada. So once we have that capital expenditure policy, the intent of the capital purchase, the nature of the purchase will have to be assessed, but it will allow for claiming of capital that is intended to be used all or substantially all of its operating life for the purpose of SR&ED here in Canada. So the legislation as it's been proposed applies in respect of property acquired on or after December 16th, 2024. And in the case of lease costs to those incurred on or after December 16th, 2024. So that's the verbiage used in the notice and ways of the notice of ways and means motion that was put forward to table the budget in Parliament. And, with capital equipment, there will have to be an analysis of the intent of the property. So what was your reason for purchase? What's the potential use of the property? Is it just for shred, or could you use it commercially? What are you actually using the property for? What type of shred are you performing? What's the length of the project? And what documentation do you have? So there will be more policies that you can actually still access the 2014 shred capital expenditure policy from the CRA. So that will give us a bit of a sense of what we expect to be eligible and how we expect the CRA to administer that. But we will expect to see a new policy introduced once that legislation is passed. So an eligible Canadian public corporation, as I mentioned, so that will be, there's some rules along here. I'll maybe skip past this, but that will be available in the, or in the recording, you'll be able to have the definition here. And again, that is in the Notice of Ways and Means legislation. So the Notice of Ways and Means, for those of us who don't always keep up to date on how our Parliament works, so there was a motion tabled on November 24th to implement the provisions of the budget, these changes. That was introduced in November 24th, November 4th. As of this week, it was just being considered in the Standing Committee on Finance in the House of Commons, and it is being considered in Senate. The Senate committees, the information has been dispersed to each of the committees, and they've been giving a timeline, I believe it's February 16th, to reply to Senate with their feedback. So we are seeing this bill slowly move through our legislative process. We have heard some expectations that we're expecting to see that in the spring, and then the policies and the forms will follow. Now, it is a bit it's going to be a bit quick. If you have a December year end, your tax return is due for June 30th. So you may, if you have a lot of capital expenditures for shred, you may want to be watching this closely and working with your shred provider to decide if you hold off on filing your tax return until these forms are available. So that is all I had for today. My contact information is here, and of course, questions can be directed directly to the World Trade Center and MEIA, and always happy to answer. I know all of this is like taking information from a fire hose, and as I said, each almost sentence has about a 20-page policy behind it. Don't feel you have to go and interpret and dig through that yourself. We're always sort of here to help, and no obligations. I volunteer with a bunch of the boards and different organizations here in Manitoba, and I just feel very strongly about innovation and research and its economic benefits. So happy to be here as a resource.
Awesome, Andrea. Thanks for this presentation. Okay, so we have a little bit of time for questions. I know Aiden just put a question here. Suppose a tech company worked on shred eligible project for real-time software integration. Post completion, there were issues resolved by post completion, there were issues resolved by developers and the customer service team. Would the time spent by both be eligible for shred?
Trading part in shred is the answer seems to always be it depends, but we would have to look at within what those issues were. Were they sort of bugs and small deficiencies that once you know it, it's like, hey, if some things when you go live or you start to understand what should have been done in the first place. So if there are obvious issues and we're making a list of those bugs and troubleshooting and we know what the resolution is once we know what the problem is, that's likely not eligible for shred. If what has happened is you're learning about deficiencies in edge cases that weren't predicted and we're not sure how to resolve them, and then we have to develop maybe a sandbox or a test system to develop a bunch of hypothesized methods to trial and experiment with, that could be shred, and that would be where differentiating what's standard practice versus what's an advancement of technology. If it falls into that advancement, then that resolution by the developers and the customer service team could be eligible for shred. The customer service team would likely gets looped in as if they're actually resolving the issues, but if they're also collecting some of those requirements and data.
Okay, so Bennett also has a question here. Really great shred overview and refresher. Thanks, Andrea. I found this bigger interesting. Curious to hear your thoughts on what's this 40% concentration says about Canadian innovation, and perhaps if SR&ED plays any role in shaping where R&D is happening. High level, I realize.
You know what, what I find interesting is on the form, there's a box that says, what area of science and technology are you working in? And I think a lot of companies right now, you have a machine learning or AI project and they're selecting software. And often they're actually not actually advancing software. They're actually maybe using known AI or machine learning techniques to solve an animal science project or a medical science project. And so I think some of this, honestly, what I would see within the clients that we work with, we do about 75 claims a year or so, is just sort of an understanding of that nuance and, you know, not selecting software because they've hired AI and software engineers, but they're actually solving maybe a crop science or an animal science or a medical problem. So I think that it's just the nature of the technology being used to solve problems currently. Yeah, perfect. And I see Ren's added my email there. Yeah, don't hesitate to reach out.
And also Krista had a question where would a software subscription expense used for research be an eligible expenditure?
So that's one of the items we're actually waiting to see in the capital expenditure policy. The software subscriptions are viewed as leases, and so it could potentially become eligible if the intent of the software subscription is fits almost a lease and is required, and you can go through all the criteria to assess it as a capital expenditure for SR&ED. And so, yeah, those software subscription expenses currently are not eligible without the capital expenditures. So it would be something similar to like server. Yeah, so Ren has put a bit of it, it depends on the date of the subscription, the duration, how it's being used in the project. But currently under the new rule, that would be under the new rules. The other thing we're expecting to see to be very topical will be computational costs. So your costs to Amazon, et cetera, which we would view as a lease of their computational network. Currently under the policy, those are not eligible, but we would expect those to come back with the capital policy. It'll be interesting to see if the CRA actually explicitly addresses those in this policy, because I think that's where software being the biggest area, server costs, access to server costs, lease of servers will be much more topical than it was in 2014.
Okay. We'll squeeze in this last question from Ren regarding your software subscription.
No, that's just Ren was responding. Sorry.
Okay. Okay.
Yeah.
Okay. Okay, so we'll wrap up the webinar here. Or Jack, you have a question?
Yeah, it's a bit of a loaded question that I kind of know the answer to, or think I do. I have been removed from actually filing a SR&ED claim for 6 or 7 years, so it's been a while. But I'm curious, Andrea, one of the challenges when I was with industry in making a SR&ED claim was the premise of looking at a challenge or a problem that the company had, and then deciding whether they should invest capital and research resource capacity into that particular project that would hopefully someday increase the profitability and the efficiency of the company. You're taking a risk, and you alluded to it earlier about because you have to spend the money before you can claim it.
Mm-hmm.
And at least I found it back then, and I'm assuming it's the case today, that talking to a SR&ED agent like yourself, and just full disclosure, there's many of them in Manitoba that industry can tap into, and maybe Andrew, you could speak to that resource a little bit more. But I think it's still the case that it's smart to talk to somebody to understand where CRA is sitting and thinking, as you alluded earlier, so that you don't go down a path of spending a bunch of money that maybe isn't eligible, or maybe you have an idea. I think there's twofold. There's companies out there that don't know they're actually doing things that are SR&ED eligible, and then I think there's also companies out there that have an idea that they want to innovate on, and and they just are worried about the risks of spending that money and then making a shred claim and getting denied. And I think in both cases, a shred agent is can be really helpful that way.
I think that's the problem they are trying to solve with these pre-claim, the reintroduction of the pre-claim consultation process. If that process worked, it would be a huge advantage. I would suggest if you want to look at it, once that process is released, again, I would use a shred consultant to do the pre-claim, because it is still very important to use their language in the way you describe the project. But it will then prevent or provide a mechanism to get an approval before you start spending the expenditures. But even without involving the CRA, we always say, I want to hear from you sooner than later. And I can't change the facts and make something shred. But if we start from day one and what is defining the questions properly, defining how we're going to experiment and what the data we're going to collect, we can help guide that process. Again, can't guarantee shred eligibility because of the nuances in the policy, but we can make it a much more stronger application by helping shape that process right from day one.
And just for clarity, and this is my last one, is I don't want to confuse the fact that the claim can go back 3 years or ahead a number of years, but you can't claim expenditures that go beyond that 18-month window. Is that what I understood?
So that you can claim your credits back 3 years or forwards 20 years. For a claim perspective, you only have 18 months from the end of your tax year. So if your tax year ended December 31st, 2024, you would have until June to claim that. So it does allow you to go all the way back to January 1st, 2024, if that was your tax year, was the full year. But yes, you have 18 months from the end of your taxation year to claim shred.
Okay, so let me put it another way, because I actually had a member ask this recently, and so I'm curious myself because I didn't know the answer. If you did something 2 years ago and you're just realizing now, hey, I could have made a shred claim on that, but you already filed your taxes for that year, you can still
amend your return. Yeah.
Okay,
Yeah.
good.
Yeah.
And you can go back how many years on that?
Just the 18 months. So it's usually only 1 year beyond what your current tax year is.
Oh,
yeah.
so 2 years, if you did it 2 years ago, then you're not eligible. You wouldn't be able to open that up.
Yeah, it depends on what your taxation year is. So for example, if you're a March taxation year, we could go back until April 1st, 2024 right now. Like
Okay.
you're March 25, you still have another 6 months to amend it. Yeah, so each one depends on or your corporate taxation year, and then you have 18 months from the year end. Yeah.
Okay, good. Thank you.
No problem.